Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez and it's Wednesday, the 9th of October, and we have Craig Erlam, Senior Market Analyst at Oanda, coming out to us from the UK. Craig, welcome to the show.
Thanks for having me.
Now, Craig, before we get your insights, I'm going to take a look and see how the markets across the regions have performed. We start with Bitcoin. Bitcoin is at 18,240. It's down 7.26%. Ethereum is at 1,304. It's down 11.1%. Now, looking across to regional markets, we start with the Straits Times Index out of Singapore. It's up 0.33%. Looking across to the rest of the region, we've got Bursa Malaysia, which is up 0.22%. Shanghai, which is down 0.39%. The ASX All Ordinaries, which is up 0.53%. The Nikkei is down 0.55%. The Hang Seng is down 0.69%. And rounding up the numbers, we've got the Kospi, which is up 0.98%. So, Craig, it's a very mixed bag. Tell us why.
Well, I think that's how it's traded all week, to be quite honest with you. There's a few dominating stories that investors are really focused on. First and foremost is the US inflation data on Thursday. There was so much to absorb last week. We had the Federal Reserve on Wednesday, the jobs report on Friday. I find it really interesting that the markets reacted in different ways than I would expect in those situations. I think the Fed on Wednesday, they gave the markets what they want, that dovish pivot. They suggested that they will slow the pace of tightening from December, but they did say that the interest rates could go higher, or they expect them to go higher than the markets currently forecast. But they got the dovish pivot because they got the slower pace of tightening. That means the Fed effectively bought time for the markets or for themselves to see better economic data, which would allow for a lower terminal rate. But the markets didn't really respond positively. I don't think they saw that potential for higher rates coming. So the reaction was actually very negative. Then you get to Friday and you get the jobs report, and it's a very hot report again. Strong jobs growth, low unemployment. They didn't get that additional labour market slack from the participation rate. Really, a lot of what the Fed did not want to see, but the markets reacted very positively. It may be a bit of a delayed reaction to the Fed finally hitting home. Then we move into this week, and it's all about that inflation data on Thursday. And I think that's really held the markets back in the opening trading days of the week. Then you move on to the midterm elections, and we're still waiting. We're still getting the results, of course, coming in from that. Markets maybe hoping for a bit of a Republican gains there, meaning that we get less spending potentially from the US going into that 2024 election, because ultimately the White House and the in Congress won't be on the same page, which means we'll get that restrained. And when you're obviously in a period of high inflation, markets potentially look on that as a good thing. Of course, that could be a negative thing if the US does fall into recession, and we do see lower levels of inflation, but maybe cross that bridge when it comes to it. And finally, the other thing that everyone has been focused on really over the last week is China. Are we seeing a relaxation of COVID curbs? Are those discussions taking place? Because while those rumors are circulating, and they really do seem to be driving sentiment really in Chinese markets right now, we are still seeing more restrictions actually being imposed in some major cities in China, in line with current zero COVID status. So, yeah, there's a lot to really take on board at this point in time, and there's still a lot to come.
Now, Craig, the other thing that's dominating the conversations and market perception is really crypto markets and the story around the liquidity crisis, which has engulfed the FTX. And then just this morning, there's an announcement of a merger with Binance and FTX. Shape the conversation for us in terms of what's been happening in the crypto market.
Yeah, these stories seem to come out of nowhere, and they seem to gather pace fast. We've seen liquidity issues in the cryptocurrency space before. We've seen hedge funds or crypto funds collapse as a result. There was a famous one earlier on this year. And therefore people have been on high alert. And when it started to become clear that we could potentially see some liquidity issues, then this really did just gather pace very quickly. And you kind of see the intrinsic, the quite a tight nature of some of these things, where you've got certain funds and you've got them being very closely tied to certain exchanges. In the case of FTX, and they meant that the token FTT really got completely pummeled when it started to become associated with low liquidity and with potential balance sheet problems, and because of the intrinsically close nature of FTX and Alameda, then it started to become a much greater concern. And once it becomes a greater concern, and people have recent precedents to see what happens when these things get out of control, then it started to plummet. And obviously, then you've got the nature, the close nature of FTX and also Binance. And we saw those tweets over the weekend suggesting that we were going to see the liquidation of some of those holdings, or a large portion of a large number of holdings, which again just further compounded the problem and really fed the speculation in the markets. And all of a sudden, you're looking at the FTT token, and it's effectively spiraling out of control, trading around $25, falling back to around $5. And now it seems that we could be seeing an acquisition creating the combination of two extremely large exchanges. This is one of the reasons why I think so many people are calling out for regulation in the industry, because when you see stories like this gather pace and you see a collapse of this scale in such a short period of time, it does just beg the question, is there enough regulation in the industry when you're talking about people putting large amounts of money in place? And would more regulation mean that these things happen far less frequently, and there are processes in place for when they do, they don't just simply rely on a Binance looking to acquire an FTX? So yeah, this is a phenomenal story that I'm sure there's still a long way to go within it, but it really does just scream for the need for more regulation for me.
Now, and finally, Craig, I want to get your insights on the commodities markets, particularly oil and gold.
So we've seen a lot of volatility in both of these, to be quite honest with you, over the course of recent weeks. Oil has continued to move back towards that $100 level barrel. A lot of this is being driven by the two major factors which we've been talking about for a long time. There is global growth concerns, which has been a downside factor for the price of oil, and there's the upside factor, which has been OPEC Plus and its activity in the markets. Now, that infamous 2 million barrel a day cut that we saw last month, that really infuriated the White House and many other consuming countries that have dealt with high oil prices, which have been a key contributor really to the inflation that we've seen around the world. And we've been told that these producing countries simply couldn't produce enough in order to create that balance in the markets, which is why we were seeing those much higher prices, then cutting output partially because these prices were starting to fall. So you can understand why this infuriated many of these countries that are dealing with much higher levels of inflation. Of course, OPEC Plus at the time suggesting it was also to do with rebalancing the market because of more dire growth outlooks. But again, how much of this becomes a bit of a spiraling effect, one affecting the other and vice versa. Then you throw in what's happening in China, which we've already alluded to with the zero COVID policy. Chinese growth this year has been much lower. China, the world's largest importer of crude oil and the second largest economy in the world. And that has a massive role to play as well. And we're seeing now that this speculation has been circulating, like I say, about the relaxation or the potential relaxation of certain COVID curves. And that is fueling speculation. We could therefore see the potential for higher growth in China and a much better rebound in growth next year. Of course, none of this has been confirmed, but when you look at Chinese markets and you look at, say, the Shanghai Composite or the performance of the Hang Seng, they are holding on to a large bulk of the gains that we've seen over the course of the last week or so. And you're also seeing oil largely holding on to those gains as well. So clearly there's a belief in the markets that there's no smoke without fire, and that these discussions are taking place and we could see an announcement. The question is, how much of a relaxation are we going to see? We've seen 2 or 3 years now of extremely strict COVID restrictions. And is the country now prepared to effectively go full U-turn on this and align with what we're seeing around the rest of the world? Or are we going to see just a slight tweak and a slight relaxation, slightly reduced times in terms of when people travel into the country, etc.? It's hard to know, but clearly markets are getting very excited.
Craig, thank you very much for your insights and thanks for coming on the show.
Thank you.
Now, I'm Brian Fernandez, and we've been speaking to Craig Erlam, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.